What's up everyone, it's Caddy with Money Investing. In this video, we are going to be talking about Meta platforms. So this is going to be a video on the formerly named Facebook company owned by Mark Zuckerberg, of course, and run by Mark Zuckerberg. So we are going to be talking a little bit about why the stock is up close to 2%. What did they announce pre-market, or not really announce, but what the speculation is that they're going to announce this week. And then we'll talk a little bit about their new models with respect to generative AI and how that could be a game changer for this company moving forward, and how I'm kind of pricing this stock right now based on the intrinsic value. We'll talk a little bit about the balance sheet as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. If you're interested in joining, you're not going to miss that out, because we've got over 3,600 members pretty much talking about fundamental technical analysis, trading, options trading pretty much all day long, as well as a lot of private videos on Patreon and buy and sell alerts, options alerts, and trade ideas as well. So the link's going to be down below if you're interested in joining. So this is going to be the state of the market right now. Pre-market, we've got Meta pushing up 1.88% back up to over $188. So we are seeing a little bit of a gap higher on Meta. With respect to the market, it is doing much better because QQQs, on the other hand, are pretty flat, up over 34 basis points. Tesla, on the other hand, is about down 4 basis points, and Apple, on the other hand, also up 30 basis points. So we are seeing a little bit of momentum for Meta right now. SPY is just up about 21 basis points. And the reason for this is that they are reportedly cutting employees. Once again, in the words, they're planning on thousands more layoffs as soon as this week. So this is the catalyst that literally came out less than 24 hours ago. And Meta Platforms reportedly ready to cut thousands more jobs as soon as this week. So layoffs continue. This is a big employment week. We have talked about this before, where the labor market is under stress because of how many layoffs we're seeing in the tech sector. So far in 2022, we've already seen over 122,000 layoffs. And this is like already 70% of the entire 2022 layoffs. So we're already in 2 months in 2023, we're already up to 70% of layoffs in the tech sector, as opposed to the entire year of 2022. So that obviously can't mean good news, because of course, if unemployment starts to go higher, right, if it starts ticking up, then that is going to increase the probability of a potential recession in the US. So that's something to keep in mind, which in the short term might be a problematic for the market, but over the long term, it might be good news for investors who may want a dollar cost average at cheaper prices, because eventually a brutal recession leads to lower inflation, leads to quantitative easing, leads to rate cuts, which leads to stock gains in the future. So talking about Meta, now moving forward, Meta, this is the catalyst why it's higher, right? 2%, it's a big reduction in cost. We'll talk a little bit about our fair value here, going over the intrinsic value later in the video. But I also want to talk a little bit about the generative AI that Meta is releasing and how this could be a huge game changer for the company moving forward. So they pretty much announced this last week, talking about generative AI, which is built on their large language model, Meta AI. That's what it's called, LLAMA. And large language models are nothing but training the artificial intelligence to use large data sets, whether it's text, images, videos, in order to generate the responses and the engagement that the user is looking for. So that's what they're really looking to do. And he also noted that Facebook posed that much foundational work is required before Meta can bring futuristic experiences to the metaverse without unintended consequences. And in related news, Meta announced that the release of the large language model, Meta AI, in an effort to democratize access for researchers, it will be available for non-commercial licensing, especially for research use case, and the AI chat experiences in WhatsApp and Messenger. Like, if I were to get access to ChatGPT like AI model, which is very engaging, top level research, and I can pretty much get all the answers that I need with a simple WhatsApp, it would be insane. Like, it would be crazy. It would even remove Bing out of my life. Like, obviously right now I'm kind of leaning a little bit more towards Bing AI as opposed to Google search, because of how accustomed I've become over time with ChatGPT, and kind of the responses that you're getting. You're able to concisely put together research, get really, really solid answers. Of course, you always have to double check everything in terms of accuracy. That I'm doing along the way anyway. But if I were to get that on WhatsApp, because I pretty much use WhatsApp all the time, and for those of you who don't know how famous WhatsApp is, I do have some stats to go over, and all of my European friends and viewers are going to agree to the fact how famous, how popular WhatsApp is in the world, which obviously is owned by Meta. AI image filters and ad formats on Instagram as well, and then AI video and model experiences as well. But these are some of the numbers for WhatsApp. I know in the US, iMessage is king, no doubt about that. But WhatsApp is obviously a lot more popular, a lot more famous outside of North America. And you'll notice how quickly it's grown to popularity with over 2.4 billion users on WhatsApp, right? And this is going to be the users by country. India, of course, at the top of the list, 390 million. And that's actually on the low end. I'm actually surprised how low this is, considering 1.4 billion population easily, without a doubt, in 10 years from now, 2032, 2033, I could easily see India sitting at over a billion users on WhatsApp alone. No doubt in my mind, considering how many people are buying smartphones and the progression towards the digital age and how many people are getting access to online internet and everything else, Wi-Fi, I could easily see India getting up to almost a billion users on WhatsApp as a form of communication, as all the usage cost, as all the Wi-Fi costs, internet costs, all comes down and purchasing power increases for people to actually use WhatsApp. I think most businesses today in India use WhatsApp, using a business account to communicate with their customers. That's literally how they communicate with their customers, right? They may not even have a website, but they have a WhatsApp account. I can tell you that much from experience. Brazil, 148 million. Indonesia, 112 million. United States, it's much higher than what I expected. 98 million users. That's about a third of the population, almost a third, because the United States almost had over 332 million people right now, and 98 million are using WhatsApp. That's a pretty good number, a third. And then Philippines, 88 million, of course. The bottom line is a lot of people worldwide use WhatsApp. Of course, a lot of them also use Telegram, but WhatsApp, at the top of the list when it comes to a messaging app. This is going to be a cumulative download. And again, you'll notice that this surpassed 5 billion downloads in 2021. And this is how they stack up against their competitors. I know TikTok is coming up. So 1.6 billion is going to be those downloads, I think, or no, active users right now. And within the top 5, of course, Meta owns 3 of the top 5 at the moment. So Facebook, of course, then we got WhatsApp and Instagram, and YouTube, of course, owned by Google, and TikTok by ByteDance. Definitely coming up, the ladder here with their vertical form video. But WhatsApp, I just feel like this is just an underestimated beast that the company has. We can morph into something super big if they're able to monetize it well. And I'm going to go over some of the ways that they can monetize this moving forward. But this is going to be the balance sheet for the company. And the reason why I'm going over is because, a lot of people tend to say that Meta's dead, Meta's done, Meta is going to be, dead, or pretty much, it's going to be gone because of the way the stock price was coming down, right? And just because the stock price was coming down doesn't necessarily mean the stock is done, the company is done, right? And that's exactly what we talked about when Tesla was coming down, right? Tesla and Meta almost had an identical chart, and at one point they were down exactly the same amount, right? So for example, Tesla at one point was down over 75% from its all-time highs, and Meta at one point was also down about 80%, close to 75%, about 77%, right? So at one point from top to bottom, they were both down the same amount, but that does not mean that these companies are dead. Yes, stock prices are performing poorly, but the stock price is completely different than what a company is. And of course, both of them have had a V-shaped recovery. So Meta has pretty much rallied over 122%, and Tesla have pretty much rallied a little bit over 85, 90%, close to 100%. So it's kind of crazy how both of these stocks have had a V-shaped recovery, and how both of them were down over 70% plus from all-time highs, and how both of them have rallied back up almost identically alike. It's crazy if you think about it. But going over to the balance sheet again, phenomenal balance sheet. So the bankruptcy risk is really, really low. I mean, they're sitting on, a little bit over $30 billion of cash and marketable securities, close to 37 billion, because non-marketable securities are also pretty high, 6.2 billion. And you've got long-term debt sitting at about, 9.9, just a little bit under $10 billion. And they've got total liabilities sitting at 60 billion. So, you've got $40 billion of cash with $60 billion of total liabilities, including long-term debt, short-term debt. So I think the balance sheet's pretty good with a lot of current assets versus current liabilities. So no doubt about that as well. Very, very liquid company. Now, going over to the intrinsic value. Now, what I've done here is that I've taken into account 2023 numbers, kind of factoring in the share buyback, which they mentioned $40 billion share buyback, which is an insane amount to begin with. That's about 8% of the float the company is planning to buy back, right? 8% of shares outstanding is what the company is going to be planning to buy back. Of course, they're going to do that on their own discretion. And I'm taking into account the cost cuts the company is doing, thousands of jobs being cut. So that's going to straight away come off of their general administrative line under the income statement. So I'm assuming that the company is able to rebound pretty well in net income, close to $30 billion. And share count is going to drop down to, let's say, 2.5 billion. That's going to be down from 2.7 billion. So they are going to be buying, millions of shares considering how much price is lower. And they've authorized close to $40 billion share buyback. So those are some of the assumptions that I am making right now for Meta. Now, they might seem a little bit on the more conservative or the more aggressive side. Again, depends on the viewer, depends on you, depends on, whether you believe that I'm actually doing a conservative or an aggressive estimate. But I think those are pretty reasonable to assume considering how many job cuts we're seeing. That's one of the biggest expense for the company anyway. So the net income, or in other words, the earnings can be obviously a lot higher with the share buybacks as well. I mean, Apple's been buying back shares since we know it, right? I mean, since 2010, I believe, or 2010, net income for Apple, take a guess, how much it's grown on a compounded annual basis. I just learned about that today. I just heard about it and it was pretty crazy, right? Net income, pause this video, guess how much the net income has grown for Apple every single year over the last 10 years. Take a guess. 9%, yet their EPS is up more than 9%, a lot more than 9%. Why? Share buybacks. Share buybacks has been the answer for tech stocks and growing their earnings per share because they've been consistently taking supply out of the market. But anyway, let's just take a look at the growth rate. So earnings expected to grow from $9.26 to $17 by 2028. That's a 13% CAGR and just a little bit under 10% CAGR over the longer term, over the next 9 years. So even if I take a conservative estimate and go with 10% here over the next 5 years, I believe that Meta is going to be able to grow earnings, net income or earnings per share by 10%. The P multiple, I go with 16, which is a lot lower than where it's trading right now, by the way. 20 times is where it's trading right now. So I'm going with a more conservative estimate of 16 times P multiple. 12% discount rate, and then we go 10% margin of safety, and we do another -1% in share dilution. In other words, share buybacks, right? The company's going to be doing share buybacks. We end up with a fair value of closer to 166, and on the upper range of that fair value, we end up at 174, 175, and the price right now is sitting at just a little bit under 190. So pre-market, we are at 193, actually. We're a little bit higher at the moment. Wow, we're at 193? Oh, no, that's Tesla. I was like, wait, no way. 188, okay. I was like, no way, we're at 193, 188. So about 11% overvalue right now. Of course, if you take into account the 174, which is on the upper end of that range, which obviously makes it less overvalued, but at the moment pushing higher on these job cuts. And this is the entire technical breakdown where we are kind of pushing higher, of course, breaking out of those resistance levels, and right now getting back up to that resistance at 187, 188. And of course, if we continue to push up, 237 is going to be next. So inside this red rectangle is going to be the big level to watch for Meta moving forward as a resistance for this company. So that's going to be the entire analysis. Let me know your thoughts. And now speaking about WhatsApp, I believe WhatsApp has a lot of potential. There's going to be business accounts. That's number one way to monetize it. Number two is going to be doing it through transaction fees. So in other words, whatever transactions are happening inside the platform, by the way, you can send and receive money on WhatsApp now. So whatever transactions are happening within WhatsApp, they can charge a small transaction fee. I can tell you there's going to be a ton of transactions taking place within WhatsApp. And the third could be advertising, of course. Advertising is how they actually generate revenue to begin with on Facebook, Instagram, all these other places. And last but not least, we got subscription fees where they could offer premium features in return of having that subscription fees for WhatsApp as well. They're already going to be starting that with Instagram, starting that, Meta Blue, which is going to be having that blue check mark against their profile for a small fee as well. So new ways to generate revenue and also cutting costs are definitely becoming more and more efficient and more lean with a lot of levers to pull moving forward for growth. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Let me know your thoughts on Meta platforms. A link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.